At the end of 2023, the UK public sector debt reached £2.7 trillion. With the economy seemingly being a central part of the election debate, how much of a problem is this debt, and should we be concerned? So there's different ways to measure the UK's debt. We can look at private debt, we can look at corporate debt, we can look at public debt, and a whole host of other measures. But this video, I'm broadly concentrating on public sector debt, which I usually take to include the Bank of England, since they're backed by the Treasury at the end of the day. So why should we care about the country's debt? Can't we just keep printing money when we need it? Well, yes and no. So the UK is in a very privileged position in that we own our own currency. So unlike some, say, European countries which share the euro, no individual country controls that. It's controlled by the European Central Bank. And that gives a lot of flexibility to the UK. So for example, the Bank of England can set its policy rate just to suit the UK economy, whereas the European Central Bank needs to consider every member state in its decisions. So why can't we just print more money? When new money is issued for the government to spend, it's done in the form of a bond known as a gilt. So a bond is basically just a big IOU from the government, and the bond realises money which can be spent when someone buys it on the public markets. So the government issues the IOU. In return, a hedge fund or a pension fund, or you as an individual, could buy that debt, could buy that IOU from the government, and in return you give the government some money and they can use that money to spend. So that means there needs to be enough people willing to buy the gilt to give the government money, and so the financial markets need to have confidence in the UK markets. Because why on earth would you buy debt from someone if you don't think they'll be able to repay it? So we saw this laid bare during the now infamous mini-budget during the Kwarteng and Truss leadership period in 2022, when a series of unfunded spending commitments were announced, and they hadn't consulted with the Office for Budget Responsibility, which is known as the OBR in the UK, and the OBR forecasts government spending and how it would impact the UK's finances. And because they hadn't consulted with the OBR before announcing all these spending plans, the market started to lose faith in the UK government, and more specifically in the UK's economy and ability to repay debt going forwards. So that meant the value of the UK government debt started to fall. And so that's shown as an increase in the yield here on the chart. So that means if the government wanted to issue new debt at the time when the yield is rising, it means that when the government issues its new debt, it would need to pay people more to buy that debt, to attract more people to buy the debt. And so that's why we had in the news when the Bank of England had to step in and start buying some of the debt, because we entered into a market period where everyone was selling the UK public debt, but no one was really buying it back. So that's how the government currently raises money, but why can't we just create numbers on a screen for new money? Well, to put it simply, it's inflation. So there's a famous economist known as Milton Friedman, and he put it quite simply and put it this way: inflation is too much money chasing too few goods. And that makes sense intuitively, doesn't it? So if the real economy, by which I mean actual sort of goods and services that are produced and consumed, think what you're buying from the supermarket, think electronics that you're using. So if that doesn't increase, but there's more money in the system, then everyone has more money competing for the same amount of goods, and so therefore people are going to be willing to pay more for the same goods. And so the economy will self-correct itself through the means of inflation, so the prices of those goods will go up to suit the amount of money that's circulating in the economy. So that meant that the Bank of England in our previous example could step in and buy lots of the government debt when it was being sold off, because that money wasn't directly being pumped into something that's buying physical real goods in the economy, or at least not directly. And so that means that money wasn't really finding its way into inflating the price of those goods. And that's why theoretically the government can keep printing money, but if it starts to filter through into the real economy, then we start getting inflationary forces on the goods and services that we use every day. And that's not really good for the population. So what do we do currently to manage the situation? So to manage market expectations, the UK government has tended to put in place self-enforced spending proposals. So at the time of recording, the government has said that spending will be at or less than 3% of GDP, which is just a measure of how many goods and services the UK produces at the end of a 5-year time span. There are some other self-imposed rules as well, which can be found in the latest copy of the Charter for Budget Responsibility, and I've popped a little screenshot of it here in front of you, but there's way more to the document if you want to give it a read. And so the whole idea of this is that it just gives confidence in the UK economy and how we're managing our debt. And so that gives confidence to financial markets to keep buying the UK debt, which allows the UK government to keep raising money through the issuance of new debt to spend on everyday things that we use, like the NHS. So this chart here shows the UK's deficit per year. And the deficit isn't the total debt, but instead the difference between the revenue that a government receives and the spending that it undertakes on public services, so things like the NHS, roads, welfare, pensions, etc. Unfortunately, I think the deficit and debt debate has been sort of politicised somewhat. So we've seen in recent times the Conservative government saying that the deficit is coming down and Labour saying that debt is going up. Both are technically true, but I think it muddies the water for the everyday person who's trying to get a grip on what the politicians are trying to tell them. So we can see that in the last 50 years, the UK government has run a deficit pretty much every year, except for a handful that you'll see. And you'll notice a general pattern. A financial event happens which causes borrowing to rise, and it's then followed by a period when the government starts to reduce that deficit as spending is brought back under control. And maybe from a political point of view, considering as we're going into an election, what also tends to happen is we have these financial shocks, and then the next time an election rolls around, we get a change of government. Now, running a deficit isn't necessarily a bad thing. So long as the government can service its debt, i.e. pay off the interest and the final coupon value when it comes due, then theoretically the government could continue to run a deficit forever, because after all, cash flow is king, not necessarily the value of the debt. But more recently, economic growth has started to slow down, and so whilst the deficit spending has broadly been in line with historical averages, the slowing economy has meant that the debt has stayed at relatively elevated levels when compared to GDP, and that's a good sort of proxy measure that we can use to assess the impact of the debt on the economy. So you can see here from the charts on the screen, we've got the chart at the very bottom there is the total debt, and so you can see that tends to rise as the deficit spikes up. And it still continues to generally rise when the deficit is low, but it just rises at a slower pace. And in the table on the left, you can see I've highlighted a few years where the UK government is running a deficit, but the actual debt to GDP ratio is coming down because the economy is growing faster than the value of debt that's being accrued by the government. And so the general idea behind this is that if the economy keeps growing, the UK will take in higher tax revenues, and higher tax revenues mean that you can keep spending on the public services that you spend on, but you can also cover and service the interest on the debt that's due. And so that's how a continued increasing debt can still be sustainable. Now, if we compare the UK to many other developed countries, we can see that if we use a debt to GDP measure, again, as just a proxy for affordability, we can see that the UK's debt doesn't actually look that bad. If we compare to, say, the US, the UK spends a smaller percentage of its government payments on debt, and there's a reason for that. So compared to many other countries, the UK has a lot of long-term debt. This is debt that's issued and won't be repaid for a long time. And you can see that shown on the chart here, with this greeny colour showing the medium and long-term debt. And you can see that makes up the bulk of the UK's debt. Now, this has given the UK government some level of shielding from the interest rate rises we've seen recently. So as rates rise, typically people who are buying government debt will demand higher yields for the debt that they're buying because they're taking on risk. But because a lot of the UK's debt is a very long-term debt is much less susceptible to the wild swings up and down of interest rates on a year-to-year basis, because this debt is often 20, 30 years plus until it matures. Now, if we compare the UK to the US has a public debt ratio about 20% higher than the UK's, but we can see that the US spends about 78% more on its debt interest spending as a percentage of its budget. Now, it also actually runs a larger deficit than the UK, so it's kind of a double whammy here. So we can see that the UK is spending much, much less on its debt interest than the US is. And that's because the US has a lot more short-term dated debt, and with recent interest rate rises, that spiked the amount of interest that the US government is due to pay. And in fact, it's due to pay over $1 trillion worth of interest alone this year. So the real crux of that question is that debt sustainable? So currently, I think it can be argued yes, but we're treading a fine line. So I think the economy will continue to play a large part in politics for the foreseeable future, and that's just because the government's quite restricted on what it can do and what it can't do with its own spending restrictions. But if we say, for example, had a few more quick succession shock events, where we've recently had the global financial crisis and then the pandemic in relatively close periods of time on a macroeconomic scale, then we could find ourselves in a point where the government debt starts to spiral a lot quicker than it has been recently. And that could mean that interest payments continue to be pushed up and up. And that means that more and more of the UK's public services will have to be cut, or there'll have to be more debt taken on to try and grow our way out of it, which is obviously a slightly risky approach. Obviously, the negative side of this is that every pound that we spend on interest to service our national debt is money that we could have been spending on other things. So we can see this breakdown here of the UK spending due in the next financial year coming, and it shows that we're spending broadly the same on debt interest payments as we are on universal credit payments. And so that's money that's going to those in society who need a bit of extra support, and it could effectively be doubled if we didn't have debt interest payments to pay. So I hope you found that really interesting, just as a bit of an overview of the UK's financial situation. If you want more of this kind of analysis and financial news, then you can join me on my journey to build a £1 million investment portfolio by hitting subscribe to the channel here. And I also run a weekly newsletter which you can join, which covers a lot of topics not seen on this YouTube channel. You can join that newsletter at riskoninvestor.com. I'll leave a link down in the description below. In the meantime, you might enjoy my take recently on long-term UK residential mortgages, which you can watch here, and you can also see why I ditched my workplace pension here. Don't forget to subscribe, and I'll see you in the next video.